Here's your host, Dan Celia.
Welcome back to Financial Issues. I'm Dan Celia. Let's see. We've got some interesting economic news coming out. I do want to talk to not coming out, some interesting economic news that I do want to go through with all of you. You may or may not find it interesting. I find it very interesting. And I just want to run through some ideas about it and just give you some insights as to why I think it's interesting and why you should find it interesting. So we're going to do that in a minute. 866-300-9298 if you want to queue your call up. Before I do that, I've got to talk about Janet Yellen. She has started her testimony. She came out this morning, and this was about, half hour ago. Janet Yellen said that the market should expect no sharp changes in the central bank's strategy. No surprise to anybody. Yellen pretty much sticking with the language of the Fed's last policy statement that the central banks will continue to taper at a pace of this $10 billion asset purchases in future meetings if, it's a conditional thing here, if the economy continues to improve as expected. I didn't know it was improving as expected. She added that the Fed's plans to hold short-term interest rates near zero is still in effect and will be in effect well past, I don't know what well past means, but well past the unemployment rate getting to 6.5%. Now, that can only mean and signal to me that she really doesn't believe in a 6.5% unemployment rate. Because if, in fact, we have seen this dramatic decrease in unemployment all the way down to 6.5%, one would believe that the fundamentals of the economy are changing dramatically, that the fundamentals of the economy are doing nothing but improving, that the same pace for employment is going to continue, and we are getting to a very uneasy place in this economy of full employment when we see this rapid pace down to 6.5% unemployment. So it could only mean, when she says that the Fed's interest rate is going to stay at zero, could only mean that I don't believe this number because the economy still needs a lot of help. It still needs a lot of free money, and we will keep interest rates at zero, even in spite of the fact that we've seen unemployment rates come down to 6.5%. Just me. I don't think anybody else is reading into that, but that's what I see in it. Yellen said that the volatility of the global markets was not causing any reason for the Fed to rethink its policy. So our sense, this is Janet Yellen, I'm quoting here, our sense is that at this stage in the developments, that they do not pose a substantial risk to the U.S. economic outlook. Talking about the international and the global economy. So the Dow futures, the S&P futures, NASDAQ futures all moved a little bit further in positive territory. They already were in positive territory. They move a little bit further in positive territory. Of course, yesterday, the Dow was up 7, the NASDAQ up 3. The S&P up 3. The NASDAQ was up 22. So looking like a positive open right now after they didn't really get anything unexpected from Janet Yellen. Now, she will be testifying before the Senate Finance Committee, so she'll be getting all kinds of questions. So it'll be interesting to see how she answers or talks about continued Fed policy. Now, pretty interesting, I suppose. That's not the interesting part that I wanted to talk to you about. One of the things that I find interesting is a report that came out by ConAgra. Many of you may not know who ConAgra is. ConAgra, as you can guess from the name, is an it's a food supply company. They are either supplying necessity kinds of foundational foods, wheat, corn, rice, bean, other things, to the food industry. And in fact, they are now actually the owner of some brand name products, two of which are pretty much staples in my life: peanut butter, Peter Pan peanut butter, and Slim Jims. But aside from that, Hunt's ketchup and a few others that they now have on the markets, that they actually own those brands. One of the things that and by the way, at the same time, now their outlook has been cut for this year. They didn't have great numbers, so they're cutting their outlook for what they originally thought this year was going to bring. But interesting, Dean Foods, another food company, a large food company, also, as a matter of fact, they swing to losses for the first half of the year, and they say pretty much the same thing. So the interesting part is that ConAgra, when it lowered its outlook for the year, is pointing to a longer than expected a time frame to turn around its private brand sector. Private brands, as I mentioned, Hunt's ketchup, Peter Pan peanut butter, Slim Jim, other kinds of brands. Weaker than expected volumes in its consumer food segments. They go on to talk about the fact that this is a result of the private brands, or the store brands, as you would know them, increasing. It is a change, they quote, a change in consumer spending as one of the causes. This is what is called, and I've talked about this at length, we will hear more about it in the coming year from the government when we hear the word chained CPI. They're changing to a changed CPI where they don't look at the goods of foods in general going up. They look at habits of consumers. What it means is, let's say Peter Pan peanut butter is gone up 50 cents for a jar of peanut butter. Well, that would be considered, in the old way of calculating consumer price index, that would consider inflation. That would be considered an increase. But under a chain CPI model, they're saying, the government is saying, that there is no inflation for the consumer, because what the consumer is going to do is not buy Peter Pan peanut butter anymore because of the 50-cent increase. They will buy the store brand. So therefore, the store brand is the same price as what they used to pay. So they have not suffered from any inflation. How's that sound for a typical government response to keeping wages low, which is what they want to do? But that's how. So when I saw this report, I immediately thought of this whole idea of chained CPI. And this kind of confirms, not kind of, it confirms what the government has suspected, that people are changing their buying habits, just like people are changing their investment habits, like I've been talking about for quite some time. People are changing their buying habits. So people aren't buying the same way they used to buy. So that takes me to something else. So we don't raise prices because we have no inflation. We don't have any inflation, so therefore there's no need to raise wages. If we're not raising wages, we still have this wage deflation. So that continues on. And all of this creating what? It's creating a lower standard of living for the middle class and the poor. Not necessarily that upper 2%, but for the middle class and the poor. It is changing our standard of living. Now, we have lived in a country for 160 years, I'll say, I'll say 190 years, where we have been blessed, one particular aging generation has been blessed to leave a country in which the standard of living is better for their children and grandchildren than it was for themselves. This and those days apparently are long gone, because I do not expect, it's a matter of fact, I don't have to die 20 years from now or 10 years from now, whenever, to find this out. It has already happened. My children don't have the same opportunities for wage growth that I did. There's no way they do. And it's getting worse every single month. Now, some will email me. I'm going to ask you not to, but you've got to get it off your chest, and you will anyway. Some will email me and say, Dan, you're really reading way too much into these numbers. Okay, well, when you email me that and tell me how wrong I am, please tell me why, but more importantly, tell me what your behavioral analytics tells you. Don't just email me that, because I would like to know how your behavioral analytics is different than mine. And unfortunately, one of the problems is we don't have economists and analysts that have their ear to the street. They've got their nose in the textbooks. They have their nose in the charts. They have their nose in the technicals, that if you go back 5 years, even their technicals fall apart. But nevertheless, they don't have the capabilities or desire to go back 5 years. They don't want to go back 6 months. And for them, long term is a year and a half. But aside from that, we don't have any politicians that have the ability to maintain or to put their ear to the street, find out what is happening in the real world. That's why they're also clueless, because they like the bubble in which they live. And it's very difficult to consider or look at unintended consequence of anything when you are, I was going to say, not capable, but unwilling to put your ear to the street to find out what the heartbeat of America is saying. I said not too long ago, it was about 6 months ago, I was in a meeting in Dallas with, I can't say who it was with, but it was with two high-level politicians that were running in two separate states for office in 2014. And there were a number of other people there. And I said that I can tell any politicians how to win an election, because I think I know the heartbeat of America better than anybody. I believe that I know my listeners very, very well, because I have an opportunity. I was speaking in Oklahoma and at an event last Friday night. I had opportunities to speak to so many of my listeners and to hear what they're saying. I do that on a regular basis as I go around speaking, or I go to town hall meetings and I do seminars. Speaking of that, I've got a very special event that I want to talk about that I'm going to be doing as well. 866-300-9298, 866-300-9298. Wait a minute. Don't call in our phone lines. We've got a special guest coming up, and then we'll go to the phones. We'll be right back.